What's up, everybody? We have a couple things to talk about today. We have a bit of news on UNH stock from the past week. If you've been following the channel, you know that I own UNH. I'm very bullish on the health insurance sector as a whole. I think the risk reward right now looks excellent. We'll take a look at this news, see how it affects our outlook. And also on Friday, we had a speech from Jerome Powell where he essentially signaled to the markets that it's very likely the Fed is cutting rates in September. We're going to talk briefly about that. As always, if you get value out of the video, subscribe to the channel. Now, let's talk about Jerome Powell and the Fed. Here on this channel, we mostly take a bottom-up approach to investing. We focus on the companies. We look at the fundamentals. I am searching for deep value opportunities. I'm trying to find companies where I think they offer incredible risk reward. It's a company first focus. That's what we mean by bottom up. Now, some investors focus on macro, or at least they use macro to heavily influence their investing decisions. You can think of this as more of a top-down approach. I don't think that there's necessarily one right way to invest. People need to find what works for them as investors, but I just think looking at a lot of retail investors in particular, they sometimes overly focus on macro events. Peter Lynch, probably one of the greatest investors of all time, said something like, if you spend 15 minutes a year focusing on macro, you've probably wasted 10 minutes. He was making a joke, but I think it conveys a truth that, yeah, macro events, they're very important. They certainly can move markets, but a lot of times the macro considerations that move markets the most are the hardest to predict, the ones that you are least likely to be able to forecast. Just to focus specifically on interest rates for a moment, I don't think any super investor like Warren Buffett or Peter Lynch when he was managing the Magellan Fund, I don't think any of them lose too much sleep or put too much thought into where interest rates are going to be, 3, 4, or 5 years from now. The truth of the matter is, and Warren Buffett has openly said this before, is they have no special ability to predict where interest rates are going. In fact, even Jerome Powell, the head of the Federal Reserve, he can't predict where interest rates are going to be, 3, 4, 5 years from now. He doesn't know. And some people, like Aswath Damodaran, have argued that the Federal Reserve doesn't even set interest rates in any meaningful sense of that term. He argues that the Federal Reserve is more reacting to changes in Treasury yields. Essentially, he's making the case that the market, which is buying and selling U.S. Treasuries, U.S. debt, that market is influencing the Fed much more than the Fed is influencing treasuries. So in a way, he's saying the market is really what's influencing the federal funds rate. The Fed is just reactive. Regardless, I think people put a lot more emphasis on the Fed, on the federal funds rate, on these little decisions in one meeting or another than they really merit. The Fed signaled on Friday that they are likely cutting rates in September. They didn't come out and say that, but they said, we're less focused on risks to inflation. We're more focused on risks to employment, the job market. And the market heard that and they basically said, okay, the Fed is going to cut rates. To me, as an investor, it's not really that big of a deal if the Fed cuts rates by, 25 basis points in September. Just to take UNH as an example, because we're going to talk about them later, I think UNH is undervalued. I don't foresee myself selling these shares anytime soon. Does it really affect me that much as a shareholder if the Fed lowers the federal funds rate by 25 basis points? Do you think that that is going to significantly affect UNH's earnings over the next 5 years? Do you think that that's going to affect their margins or the multiple they trade at 5 years from now? The answer to me is probably not much. Yes, it's true that as the risk-free rate goes down, stocks look more attractive relative to, T-bills. But again, I'm not selling UNH anytime soon, and I have no ability to predict long-term interest rates. So really, this isn't that big of a deal to me. I saw a video last week titled something like Friday, August 22nd, the scariest day of the year. And while it's true that these decisions can move markets in the short term, I'm sure no one was complaining about their portfolio on Friday. The fact of the matter is, even in an alternative universe where Jerome Powell said something else and the market was down on Friday, I don't think that it has an enormous impact on my long run returns. So that's why for me, I don't worry too much about the Fed. If you have a different opinion, that's totally fine. Let me know down in the comments below. Now, let's get into the news around UNH. Reuters reported on the 20th that Trump buys more than $100 million in bonds since inauguration. These were in a bunch of different companies. We see here Citigroup, Morgan Stanley, Wells Fargo, Meta, and down here, UNH. Now, I wanted to see the primary source for this. So if you go to the U.S. Office of Government Ethics and you find their individual disclosure disclosures search, you can just go down and filter by name. And if you type in here, Trump, you can go take a look at these actual documents yourself. And if you do, you'll just see, hundreds of transactions here. All different types of bonds, corporate bonds, municipal bonds. I mean, just going through Lower Alabama Gas District, Northern Palm Beach County. It's just a bunch of transactions. You have a range of dollar amounts here. So we don't know the exact value of these bonds, but you can get a pretty decent idea. And sure enough, if you scroll down, you'll find some corporate bonds, some corporations you'll probably recognize, Home Depot, T-Mobile, and here we have UNH. Now, I've seen a number of headlines about this, but how important is this actually? First of all, the purchase is from February 10th. Second of all, I highly doubt that Trump is making this purchase himself. He might not even know about it. I assume a financial advisor is doing this. I mean, right next to UNH, you have, St. Mary's College and the Bermudian Springs, Pennsylvania School District. Yeah, no chance that Trump himself is individually picking out these bonds. Whenever I see a headline like this, something I ask myself is, do I think this is going to affect UNH's earnings over the next 5 years? Do I think this is going to affect UNH's margins? In fact, do I think this news has really any impact on UNH as a company? You can probably guess that my answer to these questions is no. And in fact, most headlines, most bits of news that you hear about a company, most of them aren't that important. If you just for a moment think about any company you might own, maybe Google or Amazon, or pick any company that's in your portfolio. Think about all the headlines involving that company over the past 5 years and ask yourself, how many of them really matter to the fundamental workings of the company today? I think the answer is going to be not too many. Now, just out of curiosity, I looked up this bond. I found it. Here it is. This bond matures in 8 years. So if you were a bondholder, if you bought this thing in 8 years, that's when you get your principal back. That's when you get the face value of the bond back. And every year that you're holding this thing, you're getting 4.5% of par. And since they bought this thing sometime January or February, the price of the bond was lower back then, which means the yield was higher. They were getting closer to 5% of their purchase price here. Based on these yields, the bond market is saying, UNH is an extremely solid company. There's close to zero chance that they are going to default on their debt. I mean, right now, a 10-year treasury will give you roughly a 4.3% yield. Since the yield on this UNH bond is barely higher than that, the bond market is essentially saying, the risk to UNH close to zero. So in summary here, nothing has changed about my thesis on UNH. I still think the risk reward looks absolutely incredible today. My base case is not even assuming a full recovery, and I'm looking at more than a double over 5 years. My bull case is essentially UNH goes back to pretty much business as usual, and in that scenario, you're looking at a 31% annualized return over 5 years. That is pretty close to a 4x on your money. And my bear case is we are entering a new normal in health insurance. Margins will never recover. The multiple on all these health insurance companies will be lower than we have seen in the past. I think this scenario is extremely unlikely, but I have it here so you know what the really ugly bear case looks like. And I think we'll end the video here. As always, if you got value, subscribe to the channel. If you agree or disagree with anything I said, leave that down in a comment below, and I hope to see you all in another video.